Hello, my name is Beyond, and welcome to the video, The Investor Loss Cycle. And this is a cycle of how investors behave during market cycles. And this is very important to know because you have to recognize as an investor where you are in this cycle and what is the behavioral characteristics around that cycle. And you can see this all around you, from the mainstream media to friends and family, to maybe even how you feel about the market. Now, this loss cycle is very dangerous because it is the reason why investors tend to lose money in the markets and see slow gains during a bull market and huge crashes during a bear market. So when the market is going up, we have optimism. People and investors are optimistic about the market. They're excited about the market. They are thrilled about the market. And this is when you have all your friends and family and the mainstream inviting you to invest in the market at the thrill and the excitement stage. So investors normally invest and enter the market at this excitement and thrill phase. Then they invest, they will see their holdings going up, and everything is good. And this is where you get euphoria, because the thinking is that the market will never go down. The thinking is that everything is rosy and everything is okay, and you can buy anything and it goes to the upside. That's the thinking during the euphoria phase. The market may come down a little bit. Folks get a bit anxious. It comes, but say, I'm going to hold on. Let me just hold on to this market. Then it comes back down near to where they entered. It start to be in denial. And that is to come with this market. You're going to see a lot of investors are in denial about the markets and in denial about the market going down. Now, if you want to protect yourself and protect your portfolio against this investor loss cycle, you can go to dalegrowth.com. There you'll get a method that you can grow your portfolio in any economic environment. Okay, so after the denial phase, market comes down, we get fear, and this is when the market is below your entry point. You get fear, you get depression, and you get panic. And this is where investors tend to sell a lot of their holdings. So if you are buying at this level and consistently selling at this level, this is why investors in the long term tend to lose out in the markets. And you get panic, and this is where they start to sell the market, and fear, panic steps in. And that we saw that in the 2008 financial crisis, where a lot of folks sold their stocks, sold their holdings, and just gave up on the market. And this is why there's such frustration with Wall Street. This is why everybody hates Wall Street, because of this investor loss cycle. Then the market goes down, the market bottoms out, but this is where investor sentiment is the lowest. Depression, people still have a depression. Hope when the market starts to go up again. Relief, optimism, and then the cycle goes on and on. Now, what you want to do is to prevent your portfolio from going through this cycle of depression, because what you could find is that the next rally in the market could take a long time. The next rally may not bounce as swiftly as the previous one, and we are currently in the peak and euphoria stage of the market. We are currently at the top of the market, and this recording is done on May 18, 2019. We're currently at the top euphoria phase of this market, and it's all downhill from here in terms of where the market is going. So if you want to protect your portfolio, if you want to have a portfolio that does not follow this cycle and grows in any economic environment, you can go to dalegrowth.com. That's dalegrowth.com. I hope you learned about the investor loss cycle. I hope you don't fall in the trap of the investor loss cycle, because this is why folks are are fed up with Wall Street, and it's time for you to get some honest advice about the markets. So dalegrowth.com. Thank you very much.